The truth about the Fibonacci retracement. Yes guys, this video will be exactly about this, so make sure to stick till the end to get the most value out of it. So what do I have to say about the Fibonacci retracement? Does it work? Does it not work? Should you use it? Should you not use it? The reason I do this is because a lot of people being asking me lately how they can implement the Fibonacci the right way, because they use it on a naked chart and they get faked out so many times, they get so many stop losses hit, and they always ask me what's wrong, why is the fib not working, what should they do about it, does the fib work anymore, or is it just over with, what should they do? So this video is exactly about it. The Fibonacci retracement does still work. This is the truth. It still works. It's up to you to know how to use it, okay? And I'm going to show you exactly how and what I mean. So there's a lot of people that just go on a naked chart, like the daily, H4, whatever time frame you guys want to use. I don't really care. The fib can be used on any single time frame, and they just like to place the fib randomly. Okay, they just place the fib from a high to a low, then they expect it to retrace to the golden zone, and then they expect to get a sniper entry from there and take profit at 61.8, as they see on so many YouTube videos. I'm not saying that's not possible. It is, but it won't happen that often. Okay, yes, I can cherry pick some few entries that look very beautiful, that look textbook, but a lot of times you will also get this. Like, look, from this low, if we created a new high, I could use the fib, I could enter a buy of the retracement, and the stop loss would get hit. Okay, so many times you will get your stop loss hit if you trade the Fibonacci this way. Okay, so the truth is, in my opinion, that if this is the way you trade the Fibonacci, only by placing it randomly on your chart, then it's not gonna work. It's that simple. Okay, I'm not here to claim something that's not true. It's not gonna work. Yes, I know I can do this. I can come here, I can place the fib from this low to this low, be like, oh, look at this beautiful retracement, use the bar replay, oh, check this beautiful retracement right here at the golden zone, check the rejection, I would have entered a sell right here, placed the stop loss right here, and then rode it all the way down till the 618, and this would have gave me a 1.5 R. Yes, as I said, this can happen, okay, but not so often if you use the Fibonacci this way. Okay, so if this is the only way you use the Fibonacci, expect a lot of losses. All right, expect a lot of losses and don't complain about it anymore. Now, if we know how to not use the Fibonacci, I'm gonna actually show you how I think it's best to use the Fibonacci. Okay, so when I first started trading, when I got introduced to the fib retracement, I used to trade it exactly the way I presented to you, and again, I was getting in a lot of losses. Yes, from time to time, I would have had a nice win, nice little win like this one with a maybe 4 or 5 R, but then I would have had consecutively losses, like 5, 6, 7 losses in a row. Also, for the people that do not have time to trade Forex every single day, or still struggle being profitable while trading Forex, but still want to get setups like this, I highly recommend to check out my free signal group on Telegram. The link is down below. This setup was literally sent today. It was a buy limit pending order. All we do is send pending orders, because like this, every single one of you will be able to make profits from the signals, and this one was sent in the VIP. Of course, if you want to upgrade to the VIP, where we do VIP live weekly coaching sessions every single week, you can do that from the free signal group. Okay, enjoy and thank me later. Ultimately, that meant that I wasn't profitable. Okay, because if I win once and I make a 5R trade, okay, very good, congratulations. But then if I lose 6 trades in a row, I'm in drawdown. Okay, so I didn't achieve anything. So then exactly what did I exactly do to trade a Fibonacci the right way, you might ask? Well, I started implementing other stuff to it. I start combining the fib retracement with a few other confluences. Firstly, I started to combine fibs with market structure, and this was the most important step. Why? Because as I said in my previous videos, like if you don't know how to identify market structure, it's like you wanting to drive a car without knowing how the steering wheel works properly, okay? So you cannot trade Forex if you don't know how market structure works, if you don't know how to read market structure, because like that you will know if you're in an up or downtrend. Knowing that, you'll be like, okay, if I'm in a downtrend like this right here, then I will place my fib accordingly from the lower high to the lower low, okay? And not randomly from a lower low to a new lower high like this and be like, okay, I'm waiting for a retracement in this zone and I'm gonna buy and aim for the minus 618. Okay, no, because look, yes, a lot of people will do this, but it's very, very wrong. Okay, you cannot place the fib like this. If you see that you are in a downtrend and you are creating multiple lower lows, breaking structure to the downside, how can you possibly say that, okay, I'm gonna use the fib retracement like this, I'm gonna enter a buy of this pullback and aim for this high right here, okay, when you are in a downtrend? So this is the first thing you have to do using the fib retracement. You have to combine it with market structure. Otherwise, trust me, you'll get plenty of losses, because you cannot just randomly place the fib all over the place, not knowing if you are in an up or downtrend. First know, okay, am I in an up or downtrend? How do you do that? Well, I explained that in my previous video. You do that using market structure to determine if you are in an up or downtrend, and then you use market structure to place the fib accordingly. Here in this situation, okay, in this situation right here, I know that we are heading down. It's very clear. Like, this market structure is so textbook, so easy to see, so easy to spot. Previous lower high is this one right here, lower high, okay? And then from this lower high, we created a new lower low, okay? So now from here, it's safe to say that we are heading down. Yes, you can draw a fib retracement from this lower high to the newly formed lower low. Now you can just mark up your golden zone, whatever this means for you. It can either be the 50 till the 76 or the 50 till the 618. It's totally up to you. And now I will jump through the third confluence. What could be the third confluence? You probably already know, the people that are already here for a while. You guys know that I like to use candlestick confirmations as well. So now that we combine market structure with a fib retracement, now the third confluence for us is candlestick patterns in our direction. Okay, this is our entry trigger. So after we determine, okay, we are moving downwards, after we determined our range, lower high, lower low, we then placed our fib retracement, and then we get our retracement. The next step and final step for us to enter the trade is to wait for the candlestick pattern in our direction. Okay, and as I said, this can be done on any time frame. I'm just using the M15 as an example. If you're a swing trader, apply the exact same steps on the H4. If you are a scalper, apply the same exact steps on the M1. Okay, so market structure is king. It's key to all to trading. So without it, you can't do anything. So please, firstly, learn how to read market structure. After you know that, determine the trend, if you're heading up or down. Then, if you know, okay, I'm heading down, I'm forming lower lows and lower highs, establish your current range, okay, which is this one, from the lower high to the lower low. Then you draw your fib retracement accordingly from the lower high to the lower low. Wait for the retracement, and thirdly, wait for the candlestick pattern in your direction. In this case, I want to see a bearish candlestick pattern form for me to be like, okay, now I'm ready to get into a sell. Okay, I have all these confluences lined up. I have an edge on the market. Now I can go in and enter this trade. That's how you should think about it. And this is exactly how you can effectively use the fib retracement. Yes, it still does work. Okay, the Fibonacci still works. You just have to know how to use it. Okay, and not blindly place it on your charts without knowing if you're heading up or down, expecting it to always go back to the golden zone, retrace from it, and aim for the 618. No, if it would have been that easy, trust me, there would have been a lot more people that would have traded this way. Okay, so this is exactly how I recommend to use the fib retracement. Okay, so now for the third step and last step, I'm gonna wait for the candlestick confirmation in my direction to enter a sell position. And if I don't get it, let's say let's say AU will blast off this lower high. If this happens, I'm out of the trade. I mean, I'm out of this setup. I'm not entering any trades. I'm deleting the drawing, and then I'm recalibrating for a upcoming setup if this lower high gets broken. Okay, so I'm here to react. I'm not here to predict, because I see many people just place sell limits right on their golden zone, stop loss is above, and then they just expect the magic to happen, this golden zone to react beautifully, and then take profit being smashed here. Trust me, if you do this, it's going to be very hard to achieve consistency. A lot of stop losses will get hit. That's why I always wait for confirmation when I trade the fib. Okay, so as I said, if I see this lower high get broken, then I'm not in a trade. I'm okay with it. Okay, I'm just waiting for a confirmation. I am here to react. I am not here to predict. Okay, that's the difference. So let's wait for the bearish candlestick pattern. Okay, 1 2 3, yeah, 1 2 3, 3 black crows. That's how I like to call this formation. If it was a bullish formation with 3 consecutive green candles, that formation would be called 3 white soldiers. So this for me is a confirmation to get in for a sell. I would have placed my sell right here after this candle closed. Stop loss, if I was aggressive, I would have placed it above the last swing high. If I want to be more conservative, I could have placed it above the lower high. Now let's say I'm a bit aggressive, and I would have aimed for a possible new lower low, which could be either the 618, the 50, or just below the lower low. It really depends on you. Okay, so now let's just play the market and see what happens. Okay, beautiful. Take profit would have been smashed. But again, this is not easy. You have to line up all these confluences, okay? Because otherwise, trust me, you'll get a lot of bad signals, and ultimately you'll get a lot of stop losses hit. Even like this, sometimes the price will go in your direction for a bit, and then it will go right back up and smash your stop loss. It's normal, okay? There's no holy grail, and there's no 100% win rate strategy. So that's why you got to use proper risk management. But this, using the fib this way, will give you an edge on the market, and you can achieve consistency using the fib this way. Okay, because yes, again, the fib retracement can be used effectively, but this, in my opinion, is how you can use it. Okay, using a lot of confluences together with it, and not just alone on the naked chart, placing it randomly from a high to a low, then expecting for the golden zone to react beautifully. Okay, if you want the golden zone to react beautifully, you have to do all these other steps as well. Okay, viewing the market structure, determining your range, then placing the fib correctly, waiting for the third and last confluence, which is the candlestick confirmation, to enter the trade, and then just use proper risk management. Okay, so in conclusion, guys, the Fibonacci retracement is still good to use. It still works. You just have to use it properly. Okay, that's the conclusion. Other than this, I really hope you enjoyed this video. If you did, please smash a like. Feel free to also share the video. And if you have any questions, please drop them down below. I always make sure to reply. And as always, guys, I wish you all the best, and I will see you in the next video. Goodbye.